What if the biggest constraint on artificial intelligence isn't the chips, isn't the memory, and isn't even the power bill, but the wires connecting everything together? That is the bet behind a brand new fund called FOTO. FOTO is the Tuttle Capital Pure Play Photonics ETF. It started trading on May 29th, 2026, only a couple of weeks ago. It is actively managed, and every company inside it is built around one idea: moving data with light instead of electricity. Here is the story the fund is telling. In 2021, the AI bottleneck was raw compute. There were not enough chips. By 2023, it was memory. Now the real traffic jam is the highway between the chips. Inside an AI data center, thousands of processors talk to each other constantly, and the copper wiring that has carried that traffic for decades is hitting a hard physical wall. Photonics replaces those copper connections with pulses of laser light traveling through fiber. FOTO holds the companies that make the lasers, the optical transceivers, the silicon photonics, and the specialty materials behind it. Names like Lumentum and IPG Photonics sit right at the top of the fund. The timing is not an accident. The four biggest American cloud companies are on track to spend roughly $610 billion a year on AI infrastructure, and more of that money is flowing toward faster data movement. Investors noticed. FOTO gathered well over $100 million in its first couple of weeks. But here is what the marketing will not put in big letters. This fund is almost brand new. There is no one-year return, no real track record at all, so you are buying a theme, not a proven strategy. And it is highly concentrated. The top two holdings alone make up more than a quarter of the entire fund. That concentration is the point of a pure play fund, but it cuts both ways. Most of these names are small and mid-cap companies that have already run hard on AI excitement. If hyperscaler spending slows even a little, the stocks that soared can drop just as fast, and with so few holdings, there is nowhere to hide. Then there is cost. FOTO charges 0.75% a year, more than double a broad semiconductor index fund, for a narrow, actively managed slice of the market. And many of these companies may already sit inside the AI or chip funds you own, so check that you are not buying the same bet twice. So who is FOTO for? An investor who already believes the next leg of the AI build-out is about data movement, wants targeted exposure to that one idea, and can stomach a volatile, unproven, concentrated fund as a small piece of a bigger portfolio. Just remember this: a great story and a great investment are not always the same thing, and a 2-week-old fund still has a lot left to prove. If this breakdown helped, hit like and subscribe. It is how this channel keeps decoding new tickers the day they launch. And tell me in the comments, is Photonics really the next bottleneck for AI or just the latest theme to get its own ETF? I read every reply.